Hello, world. Welcome, I am your host Mr. Stag. Today we will be taking a deep dive into Blackstone Inc., ticker symbol BX. Blackstone Inc. is an American alternative investment management company based in New York City. In 2019, Blackstone converted from a publicly traded partnership into a C-type corporation. Blackstone's private equity business has been one of the largest investors in leveraged buyouts in the last 3 decades, while its real estate business has actively acquired commercial real estate. Blackstone operates 4 business segments: A. Real estate; B. Private equity; C. Hedge Fund Solutions; and D. Credit and insurance. As of 2021, the company's total assets under management were approximately $731 billion. Stephen Allen Schwarzman, born February 14, 1947, is an American businessman, investor and philanthropist. He is the chairman and CEO of the Blackstone Group, a global private equity firm he established in 1985 with former chairman and CEO of Lehman Brothers and U.S. Secretary of Commerce, Peter G. Peterson. Schwarzman briefly served as chairman of President Donald Trump's Strategic and Policy Forum. Schwarzman was raised in a Jewish family in Huntingdon Valley, Pennsylvania, the son of Arlene and Joseph Schwarzman. His father owned Schwarzman's, a former dry goods store in Philadelphia, and was a graduate of the Wharton School. Schwarzman's first business was a lawn-mowing operation when he was 14 years old, employing his younger twin brothers, Mark and Warren, to mow while Stephen brought in clients. Schwarzman attended the Abington School District in suburban Philadelphia and graduated from Abington Senior High School in 1965. He attended Yale University, where he was a member of Senior Society Skull and Bones and founded the Davenport Ballet Society. After graduating in 1969, he briefly served in the U.S. Army Reserve before attending Harvard Business School, where he graduated in 1972. Schwarzman's first job in financial services was with Donaldson, Lufkin Jenrette, an investment bank which merged with Credit Suisse in 2000. After business school, Schwarzman worked at the investment bank Lehman Brothers, became a managing director at age 31, and then head of global mergers and acquisitions. Blackstone was founded in 1985 by Peter G. Peterson and Stephen A. Schwarzman with $400,000 in seed capital. The founders named their firm Blackstone, which was a cryptogram derived from the names of the 2 founders, Schwarzman and Peterson. Schwarz is German for black, Peter, Petros, or Petra, in Greek means stone or rock. Blackstone was originally formed as a mergers and acquisitions advisory boutique. Blackstone advised on the 1987 merger of investment banks E.F. Hutton & Co. and Lehman Brothers, collecting a $3.5 million fee. From the outset in 1985, Schwarzman and Peterson planned to enter the private equity business but had difficulty in raising their first fund because neither had ever led a leveraged buyout. Blackstone finalized fundraising for its first private equity fund in the aftermath of the October 1987 stock market crash. After 2 years of providing strictly advisory services, Blackstone decided to pursue a merchant banking model after its founders determined that many situations required an investment partner rather than just an advisor. Prominent investment banker Roger C. Altman, another Lehman veteran, left his position as a managing director of Lehman Brothers to join Peterson and Schwarzman at Blackstone in 1987. He would later create the top advisory investment bank Evercore Partners in 1995. In 1987, Blackstone entered into a 50-50 partnership with the founders of BlackRock, Larry Fink, and Ralph Schlosstein, CEO of Evercore. The two founders, who had previously run the mortgage-backed securities divisions at First Boston and Lehman Brothers, respectively, initially joined Blackstone to manage an investment fund and provide advice to financial institutions. They also planned to use a Blackstone fund to invest in financial institutions and help build an asset management business specializing in fixed-income investments. As the business grew, Japanese bank Nikko Securities acquired a 20% interest in Blackstone for a $100 million investment in 1988, valuing the firm at $500 million. Nikko's investment allowed for a major expansion of the firm and its investment activities. The firm advised CBS Corporation on its 1988 sale of CBS Records to Sony to form what would become Sony Music Entertainment. In June 1989, Blackstone acquired freight railroad operator, C&W Corporation. That same year, Blackstone partnered with Salomon Brothers to raise $600 million to acquire distressed thrifts in the midst of the savings and loan crisis. In 1990, Blackstone launched its hedge funds business, initially intended to manage investments for Blackstone senior management. Additionally, Blackstone and Silverman acquired a 65% interest in Prime Motor Inns Ramada and Howard Johnson franchises for $140 million, creating Hospitality Franchise Systems as a holding company. In 1991, Blackstone created its Europe unit and launched its real estate investment business with the acquisition of a series of hotel businesses under the leadership of Henry Silverman. In October 1991, Blackstone and Silverman added Days Inns of America for $250 million. In 1993, Hospitality Franchise Systems acquired Super 8 Motels for $125 million. Silverman would ultimately leave Blackstone to serve as CEO of HFS, which would later become Cendant Corporation. Blackstone made a number of notable investments in the early and mid-1990s, including Great Lakes Dredge and Dock Company, 1991, Six Flags, 1991, U.S. Radio, 1994, Centerplate, 1995, Mega Brands, 1996. Also, in 1996, Blackstone partnered with the Loewen Group, the second-largest funeral home and cemetery operator in North America, to acquire a funeral home and cemetery businesses. The partnership's first acquisition was a $295 million buyout of Prime Succession from GTCR. In 1995, Blackstone sold its stake in BlackRock to PNC Financial Services for $250 million. Between 1995 and 2014, PNC reported $12 billion in pre-tax revenues and capital gains from BlackRock. Schwarzman later described the selling of BlackRock as his worst business decision ever. In 1997, Blackstone completed fundraising for its third private equity fund, with approximately $4 billion of investor commitments and a $1.1 billion real estate investment funds. Also in 1997, Blackstone made its first investment in Allied Waste. In 1998, Blackstone sold a 7% interest in its management company to AIG, valuing Blackstone at $2.1 billion. In 1999, Blackstone partnered, together with Apollo Management, to provide capital for Allied Waste's acquisition of Browning Ferris Industries. Blackstone's investment in Allied was one of its largest at that point in the firm's history. In 1999, Blackstone launched its mezzanine capital business. Blackstone brought in 5 professionals, led by Howard Gethleys from Nomura Holding America's Leveraged Capital Group, to manage the business. Blackstone's investments in the late 1990s included AMF Group, 1996, Haynes International, 1997, American Axle, 1997, Premcor, 1997, Comnet Cellular, 1998, Graham Packaging, 1998, Centennial Communications, 1999, Bresnan Communications, 1999, PAETEC Holding Corp., 1999. Haynes and Republic Technologies International, both had problems and ultimately filed bankruptcy. Blackstone Real Estate Advisors, its real estate affiliate, bought the Watergate complex in Washington, D.C. in July 1998, for $39 million and sold it to Monument Realty in August 2004. In October 2000, Blackstone acquired the mortgage for 7 World Trade Center from the Teachers Insurance and Annuity Association. In 2005, Blackstone was one of 7 private equity firms involved in the buyout of SunGard in a transaction valued at $11.3 billion. Blackstone's partners in the acquisition were Silver Lake Partners, Bain Capital, Goldman Sachs Capital Partners, Kohlberg Kravis Roberts, Providence Equity Partners, and TPG Capital. This represented the largest leveraged buyout completed since the takeover of R.J.R. Nabisco at the end of the 1980s leveraged buyout boom. Also, at the time of its announcement, SunGard would be the largest buyout of a technology company in history. The SunGard transaction is also notable in the number of firms involved in the transaction, the largest club deal completed to that point. The involvement of 7 firms in the consortium was criticized by investors in private equity who considered cross-holdings among firms to be generally unattractive. In 2006, Blackstone launched its long-short equity hedge fund business, Kylix Advisors. In December 2008, Blackstone announced that Kylix would be spun off to its management team to form a new fund as an independent entity backed by Blackstone. While Blackstone was active on the corporate investment side, it was also busy pursuing real estate investments. Blackstone acquired Prime Hospitality and Extended Stay America in 2004. Blackstone followed these investments with the acquisition of La Quinta Inns and Suites in 2005. Blackstone's largest transaction, the $26 billion buyout of Hilton Hotels Corporation, occurred in 2007 under the tenure of Hilton CFO Stephen Bollenbach. Extended Stay Hotels was sold to the Lightstone Group in July 2007 and Prime Hospitality's Wellesley Inns were folded into La Quinta. La Quinta Inns and Suites was spun out for IPO in 2014 and was later acquired by Wyndham Hotels and Resorts. On June 21, 2007, Blackstone became a public company via an initial public offering, selling a 12.3% stake in the company for $4.13 billion, in the largest U.S. IPO since 2002. When Blackstone went public in June 2007, it revealed in a securities filing that Schwarzman had earned about $398.3 million in fiscal 2006. He ultimately received $684 million for the part of his Blackstone stake he sold in the IPO, keeping a stake then worth $9.1 billion. In June 2007, Schwarzman described his view on financial markets with the statement, "I want war, not a series of skirmishes. I always think about what will kill off the other bidder." During the financial crisis of 2007-2008, Blackstone managed to close only a few transactions. In July 2008, Blackstone, together with NBC Universal and Bain Capital, acquired the Weather Channel from Landmark Communications for $3.5 billion. In 2015, the digital assets were sold to IBM for $2 billion. In 2018, the remainder of the company was sold to Byron Allen for $300 million. In February 2014, Blackstone purchased a 20% stake in the Italian luxury brand Versace for €150 million. In May 2014, Blackstone Group acquired the Cosmopolitan of Las Vegas Resort from Deutsche Bank for $1.73 billion. In June 2015, Blackstone acquired the Willis Tower in Chicago for $1.3 billion. In March 2019, Blackstone purchased with Yankee Global Enterprises a minority stake in Yes Network. In August 2020, Blackstone announced that it will buy a majority stake in Ancestry.com for $4.7 billion, including debt. In October 2021, the Blackstone Group acquired a majority stake of Spanx, Inc. The company was valued at $1.2 billion. The deal was prepared by an all-female investment team from Blackstone, and it was announced that the board of directors would be all-female. As of December 31, 2020, they employed approximately 3,165 people, including 166 senior managing directors, at their headquarters in New York and around the world. Employees are integral to Blackstone's culture of integrity, professionalism and excellence. They believe hiring, training and retaining talented individuals, coupled with a rigorous investment process, has supported an excellent investment record over many years. This record, in turn, has enabled Blackstone to innovate into new strategies, drive growth and better serve investors. BX's current stock price at the time of this video is $116.12 with a market cap of $139.13 billion. The stock is currently undervalued according to Simply Wall Street by 3.6% with a fair value price of $120.40. The company has a P/E ratio of 25.2. The company has a P/B ratio of 14.5, which is overvalued based on the industry P/B ratio of 35.5. BX currently pays a dividend of 2.1% and it has a payout ratio of 49%. The company has earnings per share of 4.36, a gross margin of 72.71%, a net profit margin of 25.72%, and a debt-to-equity ratio of 36.7%. Schwarzman owns 49.7% of Blackstone Partnership shares valued at more than $25 billion. An investment would be worth more than 10 times its value if you invested into BX at its IPO. Blackstone will continue to grow with private equity taking control of more businesses around the world. Tell us what you think about the future of the Blackstone Inc. and the private equity industry in the comment section below. Mr. Stag logging off.